My paycheck felt safer in 2026 because the tax cliff I feared did not hit. The top rate stayed at 37%, and that alone changes the mood. Single filers now reach it at $640,600. Joint filers reach it at $768,700. The One Big Beautiful Bill made the old Tax Cuts and Jobs Act rates stick. So this year is not about a collapse, it is about who actually feels relief. The standard deduction also rose again to $16,100 single. For married couples filing jointly, it is $32,200. And for heads of household, it lands at $24,150. That matters because more people can skip itemizing and still lower taxes. I keep thinking about how many ordinary returns get simpler right there. The senior deduction is another real win, $6,000 per person if eligible. That is on top of the usual senior add-on, not a replacement for it at all. It starts to phase out above $75,000 of income for many. Hold on to the $1,000 charitable deduction because it feels small, but it is above the line for cash gifts, so it helps before itemizing matters. Joint filers get $2,000 there, and that is real money back. The itemized charitable deduction also changed with a 0.5% floor now. I did not expect that part to matter much, but it can change donation timing. The education change is easier to feel because families understand $20,000. That is the new annual ceiling for elementary or secondary school use in plans. Hold on to that $20,000 because I will use it in a real example next. Trump accounts also debut, and they are built for children under 18. The IRS says each eligible child can get a $1,000 pilot deposit. I remember thinking that sounds like a small start until compounding enters. Think about a parent who is already juggling rent, groceries, and childcare. If they place even a modest amount into a Trump account every year, it grows. That is the kind of policy that sounds abstract until you have a kid of your own. I have lived through enough payroll surprises to know one number can matter. So let me make this concrete with a family I would actually recognize today. Picture a married couple, both age 66, with one child in middle school. They earn $110,000, take the standard deduction. They can use the senior deduction, the larger standard deduction, and cash gifts. They also can move up to $20,000 for school costs through a plan. If they give $1,000 cash to charity, that deduction still helps first. If their child qualifies for a Trump account deposit, that is one more layer. Now the payoff for the earlier numbers shows up in actual take-home pay. The standard deduction keeps more income off the taxable side from day one. The top bracket threshold also tells you who's really feeling the squeeze. For me, the practical question is simple: how much stays in my pocket? If you are near the senior deduction cutoff, check your modified income first. If you give to charity, separate cash gifts from itemized gifts and plan ahead. If you have kids, check the new education account rules before the school year. If you do not need the old itemized path, the standard deduction may win again. The bigger story is that 2026 rewards planning, not panic, and that matters. I think that is why this year feels different, even before filing season starts. It is less about some giant headline and more about the small numbers adding up. And for people like me, those small numbers are usually the ones that count. That is the part of tax law I care about, the part I can actually spend. When the rules get clearer, the paycheck feels less like a moving target.